It only took a moment for this man's world to collapse. He owes almost 2.8 million yuan. Seemingly successful, he has now become a man in debt, with repaying his loans now his only goal each day. This 40-year-old woman once had an enviable life, but now she is burdened with more than 2 million yuan in debt, living in tears day by day.
If you feel like life is too hard to go on, then maybe you should hear my story. I'm 42, born in 83, and I'm over 2.8 million yuan in debt. I never imagined that at my age I would end up in this situation. I used to own 2 beauty salons and a small hotel, but now my house has been auctioned off, my cars are frozen, and my WeChat and Alipay accounts have been controlled. Even if there's money in them, I can't take it out. I never thought about not paying back what I owe. I want to be honest and pay my debts, but how can I do that when my accounts are frozen? They won't even let me take the high-speed train or fly. My credit has been blacklisted, and they even exposed my contact list. Now everyone knows I'm in debt. They tell me to borrow money, but I ask you, who am I supposed to borrow from? A fallen phoenix is no better than a chicken.
The following businessman lost 200 million yuan and is still over 50 million yuan in debt. It's 1:30 a.m. on November 25th, 2004, and the company just went bankrupt. After some quick calculations, I estimate that the debts are at least 50 million yuan. I've just dissolved the entire management team and staff because I can't keep going. I promised everyone I would settle their wages by the 5th of next month, but after making over 30 calls, I still don't have a solution. To be honest, I really don't know what to do anymore. For more than 4 years, I've been patching one hole after another, gritting my teeth and holding on, but I'm exhausted. I really don't know where to go from here. I think back to 2003, when I was an executive at Panasonic, one of the world's top 500 companies. I was also the chairman of several building material companies like Zhejiang Jialong, Baiyuan, and Sinyao, and a shareholder and founder in many other companies. I lived a glamorous life for 20 years, but now I have nothing left. Well, except for a mountain of debt. The businessman's name is Yu Xiongxin, 44 years old. He once worked as an executive at companies like Xizhilang, Bubugao, and Panasonic for many years. Later, he left to start his own businesses, founding a trading company and a furniture factory, with a total output of nearly 10 billion yuan. During the pandemic, he invested in the health industry, but all projects failed. In May 2024, a bank loan withdrawal caused a cash flow break, and the projects completely collapsed. Countless business owners have been hit hard by these circumstances, and their struggles are beyond words.
I'm 35 and today is the most humiliating day of my life. When I had money, I didn't care about it. But now that I don't, I finally know what it means to say that being broke is worse than being a dog. I spent the whole day trying to borrow money, but I couldn't even get a single penny. I used to own 5 or 6 restaurants with 50 or 60 employees. I had my own house, cars, and stores. I never dreamed I'll end up in this kind of mess.
This fall, in the new Bridgetown area of Shanghai's Songjiang district, on a certain street at dawn, many people can be seen sleeping on the ground. Even the flower beds in the nearby park are filled with people. The bank no longer needs night security guards, as this man who sleeps here every night now does the job. Recently, a report allegedly from the People's Bank of China revealed some alarming figures. Among China's 1.4 billion people, more than 800 million are in debt, over 400 million have overdue loans, and more than 20 million have been blacklisted in credit reports. What's worse, these numbers continue to rise. It's important to note that among China's 1.4 billion people, minors and the elderly are generally unable to take out loans. Therefore, the 800 million in debt are mostly people in their 20s, 30s, 40s, or 50s. Looking at the debt structure, it's clear that people in their 30s, 40s, and 50s mainly carry home loans, while those in their 20s are more likely to have modern types of debts, like loans from Alipay, WeChat, or credit cards. In China, whether workers or business owners, everyone faces enormous financial pressure. Yet, they all continue to strive hard, hoping that one day, as the economy grows rapidly, they can achieve financial freedom. The outlook is not optimistic. Even the once high-income financial industry is now in disarray. Banking is a high-pressure job with frequent overtime. In the past, it attracted people because of the high salaries. But now, after receiving a salary of 3,900 yuan, a wealth manager at the Shenzhen branch of China Construction Bank flipped the table with his boss. Considering the cost of living in Shenzhen, this salary probably isn't enough to cover daily meals and commuting, let alone a mortgage, rent, raising children, and taking care of elderly parents. At another bank, an employee's monthly salary was just 1.09 yuan, likely due to performance pay without a base salary, raising concerns about fairness and employee treatment. For lower-level employees with a relatively low base salary, it's likely they have to pay for their own meals and transportation, a situation they call paying to work. Even in the upper echelons of the financial industry, like securities and investment banks, the situation is grim. A user from a large securities investment firm said that some colleagues recently received year-end bonuses of 0, while others who worked on several major projects received bonuses equivalent to about 1 month's salary. His pre-tax monthly salary is around 10,000 yuan, and his pay may be further reduced next year. He can no longer afford his mortgage. Middle-class white-collar workers in big cities often have monthly expenses that include mortgages or car loans of several thousand to tens of thousands of yuan. With family expenses, their monthly spending easily starts at a few thousand yuan. A couple would once be able to manage a seemingly comfortable middle-class lifestyle by working long hours and enduring heavy workloads. Now, with incomes dropping sharply, even that lifestyle is out of reach. A branch manager at a Shenzhen bank recently complained, saying, "My mortgage is over 20,000 yuan a month, but my salary no longer covers it. Even if I sell my house, I would still need 2 million yuan to clear the loan. Now, I can only rely on my wife to support the family, hoping her job doesn't face any setbacks." Some financial workers have started taking side jobs after hours to survive. But using spare time to engage in physical labor for extra income is against company rules, and they risk being held accountable or even fired, which would be truly unfortunate. A well-known financial blogger from Hunan remarked that many companies will fail this winter due to local government's constant policy changes. "I'm really pessimistic. A lot of people might not make it through the winter. I'm not exaggerating. In Changsha, there's a massive wave of loan withdrawals coming, and it's already happening. A loan withdrawal is when a bank decides to call in a loan before the repayment term ends, for any number of reasons. When this happens, the borrower has to pay off the entire principal at once, which is a huge financial burden for many companies and individuals. Why is this happening? It's because property prices in Changsha have dropped significantly, at least 30% compared to last year, and some developments have fallen by 40 to 50%. It's understandable that banks are pulling loans now, but can't they just let me pay off a little bit and continue with the loan? No, they're pulling it all. 2 or 3 years ago, as a leader, you could get any business deal done. Branch managers would approve anything, even transferring a business license. But now, why has it all changed? Honestly, I feel for my clients, but I'm powerless. A lot of people are going to be crushed by this trend this winter. It's really sad. I don't know how other people in my industry are handling it, or how the industry will cope with such massive bad debts. Doesn't it concern them? Financial analyst with 3.75 million followers, Xie Gongxin, explains that most of China's middle class, age 25 to 40, are high-level technical experts or middle and senior management in industries like manufacturing, education, and the internet. They earn annual salaries ranging from 100,000 to several hundred thousand yuan. This group forms the backbone of China's consumption and is the primary target of policies designed to boost spending. At China's 2020 National People's Congress, then Premier Li Keqiang revealed that 600 million people earn less than 1,000 yuan per month. The statement sparked a nationwide discussion that continues to resonate. Xie Gongxin points out that these 600 million people with such low incomes have no room for increased spending. So, the government focuses on stimulating the middle class, whether it's through tax cuts, lower interest rates, or issuing vouchers. The ultimate goal is to push the middle class to spend. That's the only way the economy can grow and domestic demand can rise. But the truth is, the middle class is already struggling. If they had money, would they need encouragement to spend? Spending is the easiest thing to do if you can afford it. The reason consumption is shrinking and people are cutting back is simple. There's no money to spend. Some might wonder, how can people earning between 100,000 and 500,000 yuan a year have no money? It's not just about income, it's about expenses. The widely discussed middle-class bankruptcy trio explains why this group is hesitant to spend. First, there's the mortgage. Someone earning 20,000 yuan a month may have to pay 12,000 just for housing. Second, they may have a stay-at-home wife taking care of the children. Third, they might have a child attending an international school. These fixed expenses can wipe out 90% of a middle-class family's income. Even if their monthly salary is 20 to 30,000 yuan, they're left with only a few thousand after expenses. On top of that, they need to take care of their 80-year-old parents while facing job risks and career plateaus in their mid-30s. This uncertainty makes them even more cautious about spending. Xie Gongxin explains, high debt and high expenses are suffocating China's middle class. Even if they work relentless 996 schedules, exhaust their bodies, and endure endless pressure from their bosses, they don't dare quit. Without an income, every night brings the fear of mortgages and school fees piling up. It's terrifying. A report once described a man in Zhenjiang, Jiangsu, who broke down in tears late at night. He was overwhelmed by his mortgage, the responsibility of supporting his wife and 2 children, and the immense financial and emotional pressure. No matter how hard life was, he couldn't stop moving forward. His entire family depended on him. Xie Gongxin says this story reflects the struggles of countless middle-class families. On the surface, they seem successful, but their breakdowns often happen in an instant. They are already living on the edge. And if this is the reality of the seemingly well-off middle class, what about workers at the bottom or those in flexible employment? On China's short video platforms, many ride-hailing drivers share their experiences. They say the platform's algorithms have pushed earnings down to just 30 yuan an hour, no matter how hard they work. Most of the income goes to the platform itself. One driver shared, even if I drive 10 hours a day for 30 days straight, I can only make about 9,000 yuan a month. After car expenses and fuel, I'm left with just 4,000 to 5,000 yuan. Sometimes I wonder if I'd be better off as the security guard downstairs. Data from China's National Bureau of Statistics shows that by the end of 2021, there were around 200 million flexible employment workers in China. According to Ali Research Institute, this number could grow to 400 million by 2036. For this massive group of workers, incomes are even more unstable. When faced with economic pressure, people usually have 2 options: take on more debt or reduce existing liabilities. But China's average household debt ratio has already reached 63%, leaving little room for more borrowing. Many people don't even have the means to reduce their debts. Despite working to exhaustion, heavily indebted families see little improvement in their lives. Debt itself isn't necessarily bad. Healthy debt can accelerate the development of families, businesses, and the economy. But when income can't keep up with debt repayment, it turns into an unbearable burden. The most helpless feeling isn't failure. It's knowing that no matter how hard you try, there's no way out. How can anyone talk about encouraging spending or home buying when the middle class is already drowning in debt? Earlier this year, CEIC, a Hong Kong-based economic data firm, reported that China's household debt has risen by 50% in the past 5 years, surpassing 11 trillion US dollars. Over 8.3 million people have been blacklisted as dishonest debtors, representing 1% of China's workforce. Those on the dishonest debtor list face strict limits on non-essential spending, including bans on purchasing airline tickets, high-speed rail tickets, or staying in luxury hotels. China's personal debt surged in the past 5 years, primarily driven by mortgages. For years, China's real estate market boomed, with property prices soaring far beyond GDP growth. Many people took out large loans to buy homes, and as loan amounts rose, so did debt levels. Even though housing prices are now falling, they remain high, making mortgages unaffordable for many families. Another reason for rising personal debt is a change in Chinese spending habits. With technology making loans more accessible, people increasingly borrow to finance their lifestyles. While this does boost economic growth, it reflects deeper concerns. Associate Professor Xie Tian at the University of South Carolina Icahn believes this shift reveals a growing sense of disillusionment among Chinese citizens. In the past, China's annual household savings rate was 20 to 30%, far higher than the average 5% in Western countries. Today, savings are declining, and those who continue to save are mostly middle-aged and elderly people. Xie Tian explains, young people today aren't saving as much. Sometimes they feel hopeless. Prices are so high that even if they save, it doesn't amount to much. Another major factor is inflation. Transportation and communication costs are rising quickly, not to mention housing, education, and healthcare. These increases are all tied to rising living costs. Xie points out that China's declining real estate market has caused widespread mortgage defaults and loan suspensions. As these loans turn into bad debts, overall societal debt continues to grow. This issue negatively impacts consumer confidence, retail sales, and economic development. Many people used to spend heavily on property because they believed it was a valuable asset that would appreciate. Now, as housing prices fall, this loss of wealth leaves many people hopeless. The increasing debt burden has become overwhelming for them. Xie believes that China's real estate, stock, and bond markets are all in crisis. Because large banks are government-controlled, they lack checks and balances, which could lead to an even greater crisis. In reality, I believe China's financial crisis is already happening. Unlike the US, where the Federal Reserve operates independently and sets interest rates or controls money printing, China doesn't have an independent central bank. The government can print as much money as it wants with no restrictions. In China, the central bank functions much like the Ministry of Finance. Both are directly controlled by the Communist Party. This means they can print money to delay or cover up crises. However, debt, bankruptcies, and bad loans are still growing, and eventually it will all be impossible to hide. This crisis is like a ticking time bomb. Many analysts argue that increasing people's incomes is the only fundamental solution. This would improve the country's overall balance sheet. For example, during the pandemic, the US issued large amounts of debt, which initially raised concerns about sustainability. However, US economic output grew faster than its debt, reducing the debt to GDP ratio. This eased worries about the debt problem. In contrast, China's current policies are moving in the opposite direction. The government focuses more on production, including developing advanced productivity, rather than supporting consumers. This lack of attention to the consumer sector delays the structural adjustments China needs. Meanwhile, economic problems within China's government have also become severe. Many local government agencies and public institutions have started cutting or delaying salaries, which could threaten social stability and undermine the party's rule. According to data released by China's Ministry of Finance on November 29, 2024, the total balance of local government debt stood at 45.3 trillion yuan as of October. However, Goldman Sachs estimated in August 2023 that China's cumulative local government debt could be as high as 94 trillion yuan. Under such financial strain, governments at all levels are scrambling for revenue. They have ramped up tax collection efforts, including targeting businesses across provinces. They are also increasing fines, such as parking penalties, and even using controversial entrapment enforcement to fill funding gaps. Professor Shi Heling from Monash University Business School told Voice of America that China's local public finances are stretched to its limit. Tax revenue is insufficient to repay debts, let alone cover public sector salaries. The central government's plan to issue 10 trillion yuan in bonds aims to address local debt issues, but Shi describes it as only solving 1/10 of the problem. What about the other 9/10? He argues that local public services form the foundation of the Communist Party's rule in China. If hospitals, police departments, and other essential services are also in debt, it will lead to widespread social issues that could threaten the party's political stability. Clearly, the situation has caught Beijing's attention. On November 19, 2024, China's State Council Employment Promotion and Labor Production Leadership Group held a video conference to launch a winter campaign addressing wage arrears. According to Xinhua News Agency, the meeting emphasized strictly correcting all forms of wage arrears to protect the rights of migrant workers and maintain overall social stability. Shi Heling believes that when Beijing issues a central directive to resolve wage issues, it signals that the problem is extremely severe and requires urgent intervention. However, he adds, it's like trying to cook without rice. They want to solve it, but without money, it's incredibly difficult.